Welcome to Subramani. One question which I was asked last week by a bunch of college students is discount broking good? Okay, the question the way they asked this is Robinhood investing good for the economy, good for the people, good for the students who are doing it, right? I really don't know. I have a mixed answer. Like I've seen broking since the 1970s, right? So there was a time when brokerage rates used to be 2.5%. There used to be a lot size, which meant you could buy only 100 shares of a company, or 50 shares of a company, or 10 shares of a company if it was a higher face value. I have seen this industry and the way the industry was in the 70s and 80s, and I would think pre-SEBI, it had a lot of roadblocks. You could not have had so many people coming in. First, there was a ring, which means physically you could trade only an X amount of shares, and I don't think those days the turnover used to be more than 225, 250 crores. A great day would be 250 crores in the peak of a bull market of say 1991 or even 1992, right? And then we have seen it fall because of dematerialization. There was no problem of bad deliveries, etc., and volumes just went through the roof. And then we now have many players in India who are with the zero brokerage, what I would call the Robinhood type investors, which means when I say Robinhood, I don't mean the word Robinhood as in the US, but it includes all those discount broking companies which are there. Now in India, there are many discount broking companies, but one thing which is still missing is the fractional share. Now, if you bring fractional share also in, then what happens? So let's go to the basics of investing. What works? Compounding works. Compounding means more money makes more money, and that money makes even more money. That's the basics of compounding, and therefore an early start in investing is always good. So here there is somebody in India, I think Zerodha started it, but now there are many websites and agencies, companies, whatever you want to call them. They're all giving you zero brokerage or extremely low brokerage. That's become quite a norm. So you have various versions of it. You pay 500 rupees a month, and then you pay all the legal charges, the STT and whatever other taxes are there. You pay all that, but you pay brokerage of only 500 rupees, in which you can trade worth a few crores a day, which means you can do 100 crores or 25 crores or whatever, depending on your capacity, depending on what you want to do, depending on how long you hold a position. Nothing very wrong, but then this is trading, this is not investing, and the media has very little distinction between a trader and an investor, and between trading and investing. So every morning they wish you good morning investors, what they mean is good morning traders. So first let us look at the positives. One, younger people today have lot of data and lot of stuff on their fingertips, between YouTube channels, between websites, between paid newsletters, etc., etc. There is tons of material available. Now, is this information for action? That I do not know, because you can find contradictory reports on almost everything, right? For example, if I made more money from Berger Paints than from Asian Paints, somebody is going to say, oh, let me buy Berger Paints. But it is also possible that you go and you go to Google and say best shares to buy, and it shows up Asian Paints. There's a very good chance that many of these youngsters would be wanting to buy Asian Paints. Now, what is missing in India is a fractional share. So if it shows up as the best shares to buy are Shri Cement and MRF, sadly or happily, these kids won't be able to buy it, right? They will not be able to pay 80,000 rupees or 90,000 rupees to buy one share, or 30,000 rupees to buy one share. So they will just pull back and say, oh, let me buy something else. So then there is the ADAG group available at very good prices. 1 rupee, 2 rupees, you can buy RCom, R Power, R Capital, all that are available at those prices. So they might concentrate on that. The worst thing which happens in a situation like Robinhood is it functions more like a casino, which means the longer that you stay there, the greater chances that you will lose money. You will not be able to make money. Very good chance that you lose money, which is exactly the opposite of investing. When you invest, the longer you stay, the more money you make. For example, if you put money in an index fund today and you keep putting every day, just because you do not know what else to buy, very good chance that after 4 years, 5 years, 10 years, you will make money because you stayed longer. That's all. There is no great thing. It's like, once upon a time when we used to give advice to cricketers and say, just stay there, you will get a loose ball. But today with T20, you cannot use that experience and say, oh, just be there and the runs will come. You have only 120 balls to play, right, for the whole team. So the question is, what happens to people who come in and trade and they lose money? Chances are they will lose enough money so that they run away. And the worst thing a bull market does is it hides risk. Risk is not visible. So today, every dentist, every heart surgeon, every other doctor I meet, every student I meet, everybody is buying something and making money, and making more money than what they would make in a bank fixed deposit with which they will compare. So obviously, a lot of people are coming in, they are making money, they are hiding the risk, they don't understand. So that is the risk which is there, but I'm not getting too much into this. The question is, will the financial service industry create the fractional share? The answer is yes, completely yes. There is no doubt about that. India will create the fractional share. Who will be the beneficiary of this? Old investors who have MRF and Shree Cement and Asian Paints or HDFC Bank, or these are the people, because all these people will, all the new young kids who are under the Robinhood way of investing will come and buy these shares, because there is no other great choice, and the Google search will show you that the best share to buy is Asian Paints or is MRF, right? So everybody will go and buy one fraction of MRF. Imagine even in the 1970s, you would have had to have minimum over 4,000-5,000 rupees before a broker would even entertain you, right? Because it was expensive, buying and selling was expensive, so you had to get a reference. Only then they would have taken your account. Now, come to 1992-93, anybody could open a broking account. It was very easy. However, brokerage rates were still very high, and the minimum transactions which were happening, even now their minimum transactions are not very small. Then dematerialization happened, and every share became a 1 rupee share. I mean, some irrelevant shares like MRF refused to split, refused to give a bonus, and refused to do anything to their face value. So it means it become very difficult to trade in MRF. It's almost impossible to trade in MRF for 99% of the people who enter the market. So that's out. But we will introduce fractional shares. Once you introduce fractional shares, the older shareholders will benefit, because these shares will go through the roof, right? Because there will be more and more people buying. So it's more not so much about whether that's a good share or a bad share, but the number of people buying will increase. And one thing all of us have to accept, the share price goes up because when there are more people buying, and the share price goes down when more people are selling. So if you are entering a broking with the theme of I'll make some money and come out, which means like a casino, then the chances are the longer you stay, the more money you will lose. But if you are saying, I am going to use this Robinhood kind of a thing, or free brokerage, free demat account to learn investing, it may be a great place. Now the problem is, from where do you get this much of gyan as to where to invest and what to invest? That price has not gone down. We have made trading very easy and investing almost impossible. It is impossible to stay on in a company, because somebody will tell you it's a good share, it's a great time to be selling, and you will sell. Younger kids are not better informed, they have more sources of information, but there is not enough analytical stuff given to them. That is something bad. But I'm not cribbing. I'm happy to be a shareholder in many of these companies which are giving you these kind of low brokerages. Happy trading, have fun. Thank you.